Welcome to the condensed version of the daily video update, where I'll go over the action in the market for Thursday, July 27th, and then we'll see how things look for Friday, July 28th. We had a bit of a down day on Thursday. We gapped higher and everything was looking really positive, but then we ended up shooting lower as the day went on. We're still looking positive though. We're just working off this overbought condition that we've been in for quite a while. But if we see more follow through to the downside, that could switch things back more negative. So what are some comments that we can make? The Nikkei reported that the Bank of Japan is going to discuss possible changes to the yield curve control policy, and this already happened. The meeting that they had is already on Friday. This is kind of the background of the story that I allude to, especially in the weekly video, where I say I'm keeping an eye on the interest rates in Japan. They're really low right now, but that's a story that may come to the forefront at some point. This is part of that story. They've been keeping their interest rates really low there, and they own the most U.S. Treasury bonds. If they start running into some problems, they're going to have to sell those Treasury bonds. When they sell, that makes prices go down, which makes interest rates go up, which may have an impact on the U.S. stock market. And this produced some concerns as they're trying to unwind some of these longer-term bonds that they hold on to, because most of them are U.S. assets. Also, bonds fell hard on this news. The 10-year bond went back above 4%. The European Central Bank did raise rates 25 basis points, but now we're starting to hear rumblings that they might be getting close to finishing with raising interest rates. Will this positive scenario continue? We're right at that point where we could shift to a more negative scenario or come back to the more positive scenario, in that we might have a soft landing, that the Fed is almost done raising interest rates, and that future earnings growth still looks positive. On a short-term basis, our list has really gotten a lot shorter. Only the stochastics are extreme now. On the intermediate term, we've also lost a lot of indicators. We have the PMO studies, the Sean Trend Meter, and the Bullish Percent Index for the S&P 500, as well as the NASDAQ 100. Those are still extreme positive. On a long-term basis, we're coming down with our moving averages, the 150 and the 200, but they're still extreme. The U.S. dollar advanced on Thursday and interest rates were up. We still have all of the yield curves that we follow that remain inverted. Sentiment is still extreme at 78. It won't drop to positive until we drop to 75. Our trend is still positive, but the green line, even though it's on top, it is declining. The ADX is still above its moving average, and we're still close to 40. I've changed our bias now to negative with the down day, and our momentum mixed to positive. The economic reports that came out, we had weekly jobless claims. This is still showing that the labor force is strong. They had 221,000. They had expected 233,000. We're also seeing a decline in the continuing jobless claims at 1.69 million. The advanced GDP, this was the big economic report for the second quarter. It came in up 2.4%. Much more than the 1.6% they had expected. Last time it was at 2%. The deflator, which measures inflation, it came down to 2.2%, or last time it was at 4.1%. Durable goods orders came in up 4.7% month over month. They expected it to be up 1%. Last time it was up 2%. If you take out transportation, we were up 0.6% month over month. They expected 0.2% gains. Last time we saw 0.7% gains. The advanced international trade in goods deficit came in at 87.1 billion, less than the 91.1 billion we saw last time. Retail inventories were up 0.7% and wholesale inventories were down 0.3%. Here's the intraday chart where we really gapped higher. And I have to confess, I was watching the futures and we kept going up and up and up as Europe was having a good day. And I thought if we were ever going to see a down day, this would be it. Because we gapped to the upside. A lot of people see that. They want to lock in their profits. And so they sell into strength. We did see that where we opened above R2. We came down to R1. We were able to bounce almost back up to R2. But then later in the day, some weakness started to come in. We fell down below the unchanged level, down below the daily pivot, down below S1. We went all the way down to S2. We ended up closing a bit off of S2. Here's the growth to value ratio where even though we declined, we were still positive on the day. Here's the condition of our trend. The ADX is above 40. It's above its moving average. The green line is on top, but it is declining. and the ADX could be considered to be extreme positive. We're seeing pretty much that same thing with the short-term ADX chart, above 40, above the moving average with the green line declining. On the daily chart, we came to the underside of this upward sloping trend line, and then we came down from that level. If we continue to fall, will this pivot level hold as support, or are we going to fall even further? On the bottom, you can see where volume was above average. We're keeping an eye on the NASDAQ, the 61.8% retracement level. We're still above that for right now. If we continue to fall, will this level offer support? We're also keeping an eye on the NASDAQ 100. We had a good open, but then spent the rest of the day coming down. We're still above the August 2022 highs. We're right about on this pivot level. If we keep falling, will this previous high now act as support? We're also watching the NASDAQ, which is turning more negative. We saw a negative divergence based on price with the PPO momentum oscillator, and now the PPO is actually turning more negative. On a weekly chart, the S&P, we're still above this long-term upper resistance line. We don't know whether to call this support or resistance right now, but we're still above it, and we're still slightly above it with the NASDAQ 100. We'll be watching these levels. When we look at the ratio between the NASDAQ 100 and the Dow, we are getting a pretty high reading. We're starting to come down a little bit. We could go a little higher than this, but when we topped out from extreme readings and came down before, this spelled some real trouble for the markets. So what's our outlook for Friday? There will be a policy meeting for the Bank of Japan. By the time you see this, that meeting's already finished. There are influential earnings reports that will be released. The technicals for right now continue to be positive, and right now it looks like we're just working off being overbought. If we see more downside, that could switch the environment more to negative. The economic reports coming out. We get personal income and spending, the PCE and core PCE price indexes, the final consumer sentiment survey, and it's a little out of order. We get the second quarter employment cost index. We're also keeping an eye on the geopolitical events, but right now it's all about inflation and interest rates as far as the market is concerned. Here is the updated economic calendar so far for the week. Looking at the Stock Traders Almanac statistics, we are 50-50 for the week after options expiration. For July 28th, the Dow tends to be negative, where the S&P is neutral to positive, and the NASDAQ ends up being more positive. So we're seeing kind of a mix right now. We will be on the 19th trading day of the month, where we do tend to see some weakness going into the end of July. We're also looking at that same weakness for the NASDAQ going into the latter part of July. This is the first look that we're having at the August performance historically, where we often see some weakness at the beginning of the month, maybe a little bit of strength in the middle of the month, then a little bit of chopping around with some weakness before we tend to historically finish off more positive. Going back to 1950 and looking at pre-election years, the S&P 500 has a 50-50 track record of being either up or down. So our scenario's not really going with the down one yet because it still looks like we're just working off being overbought. That could change if we see more downward movement. We're still defaulting to the upside, but we need to see some follow-through price action going up before we really take on this positive trend. We're not going with the sideways trend now because our ADX is really strong and it's showing that we're in a trend, and that trend is positive even though the green line is declining. The warning signs, we're wondering, this convergence of these short-term bearish signals, are they starting to come together to produce some weakness? Longer-term trend signals may be signaling a top. That's the weekly S&P chart and NASDAQ 100 chart. We're still above those levels right now. Are we going to be able to stay that way? Seasonally and historically, we're coming into a weak time of the month. The oscillators are turning more negative on the ones that we look at. We're watching the NASDAQ 100 more closely because that could take the rest of the market down with it. The VIX is still showing that there's not a lot of fear. The cumulative new highs and new lows for the NASDAQ continue to show weakness. The 3-month yield is still above where it was back in 2007. In fact, it continues to go higher. The S&P growth is weakening, but it's still in an uptrend. And then we're also dealing with earnings season. The positive signs are we have seasonality and setups in the background that still are there, and they are positive. The long-term daily special K chart is positive. The weekly chart is negative, but showing some improvement. The long-term equity put-call ratio is positive. The S&P is still above the downtrend channel upper line. We're far away from that line. We're still in a risk-on posture. We got a little bit of that back on Thursday. Lower price levels may provide support. So far, that's been happening. We'll have to see if that can continue. The S&P is outperforming utilities. The NASDAQ and NASDAQ 100, they're still above that longer-term resistance level. We could almost call it support, but we don't really know what that's going to be right now. However, on the daily charts, the NASDAQ and NASDAQ 100 hit overhead resistance and are starting to come back down. The Staples to S&P 500 ratio is declining. The Russell and the small cap index, as well as the mid caps, generated recent golden crosses. Small and mid cap growth is still positive, and the Copic curve, as well as the Pring bottom fisher, have generated buy signals. So our conclusion, the S&P, it's positive for right now. And right now, it looks like it's working off being overbought. In the short term, yes, we're showing some weakness there, but that could quickly be recouped. Where in the intermediate term, it still looks like we're just pulling back after being extreme. In the long term, we still remain positive. Thank you. I hope you found this helpful. Please feel free to check out the full-length video. Have a great day, and I will talk to you in the next video.